Yes, good morning. So,
We could say good afternoon also. But yeah,
what time is it? It's not 12
12
yet?
o'clock, 12:02.
12:02. Okay, sorry. Good
So
afternoon.
this is a good time actually because people are having lunch, hopefully, and they can listen in and we can talk about the great news we had today, which is a 1% increase on the interest rate. Already this morning, a bunch of brokers were calling me, real estate agents were calling me, asking, should I change careers? Should I panic? Because some of them started during COVID or over the last 2 years, and the market was just fantastic and fast paced, and now suddenly slowed down quite a bit. And then we have this 1% increase, which is something we haven't seen in many years since
20 more, like 98, 1998, the
1998.
last one.
I was reading. So how do you think that's going to affect the market, if anything?
But I would like to have like a crystal ball, but I think it's got maybe like a small effect, only like just to like the qualify rate, to the stress
Yeah,
test.
and
Okay.
and we said you agree. You didn't quite agree.
But the thing is, what I said in French, I had to say the same thing in English.
Yeah, I think no, you don't have to. You can change your mind, but I think it's going to be less than 25% of the new first-time buyers. And as I'm saying 25, I'm even thinking that's exaggerated. I think it's 10 max now. I'm going to change it. 10% maximum where they will not be able to maybe qualify as easily. But then again, they can go borrow some money. They could put more cash down. They might not have it, but they can go borrow it from a parent. We talked about reverse mortgages, which we'll talk
Yes.
about in a few minutes.
Yeah. But let's say for the insured mortgage, if you look at the stress test, the stress test was 525. Now maybe it's going to be a 570.
Let's clarify quick. What's an insured mortgage? I know it's kind of basic, but
insured mortgage is when you don't give 20% down payment.
So you don't have 20% to put down. You have less than that. You get your mortgage.
You have like a premium to pay, like can be Sagen, CMHC, Canada Guaranteed. So you have to pay a premium, and that gives you access to a better rate. But the amortization period is only for 25 years. If you have a conventional rate, conventional loan, you can go up to 30 years. Yes, the rate is slightly higher, but you don't have a premium to pay. So that's the difference between.
And the premium you can add to the loan, so it's not something that you got to pay up front. You can.
No, you just add on the loan. Yeah. The only thing you have to pay is the tax on the premium. That you cannot finance the tax.
But that's not a huge amount.
No, it's not a small amount, but it's still.
So you were saying maybe that it's going to affect the people that are for the pre-qualifying rate.
The stress test.
The stress test, excuse me.
No, the stress test. Because already with the fixed rate, because the difference is you have to qualify the file at 525, or the contract rate is 2%
plus 2.
So already with the fixed rate, we busting like the stress test. So and still up to yesterday, we were able to qualify a client with a rate of 525. And now, because of the increase of today.
Yeah, but wait, you're going into the technicalities of it, and it's great. Well, I don't know. It is important, but I think that most real estate agents or brokers out there watching this or listening in, and I know it's not just for agents and brokers, I don't think they care about the minutiae or the technicalities. They're concerned about the effect of the market. I'm saying, and I'm trying to reassure them, less than 10, if even 10, so their business shouldn't slow down. Do you agree? You agree. All right. I'm glad that you're done.
So
because that's where they're nervous about that. They're nervous about.
Yeah, but I mean, I understand they're nervous about that. But it's always up and down. Like in any sphere of activities, economical speaking. I mean, the stock market goes up, go down. I mean, the real estate is going to go up and down. What goes down goes up. I mean, obviously, it's all. And I understand that the young brokers, the one with no experience, they're fairly new on the market. They don't know any better. So obviously for them, it's like, wow, it's a catastrophe. I mean, the rate are high. I mean, yes, but they're not that high compared to where they were supposed to be.
And where they've been for many years.
And now, because what we're living now, it's unique. I mean, it's a long time. We never live what we're living now, in the sense that we pay like the gas expensive. The food, everything's expensive. So now and obviously and it's not necessarily something related to real estate. I mean, it's greater than only
Yes.
real estate, and that's why. I mean, that's why I'm saying it's unique. It's different, and people have to understand that.
And residential real estate, which most of us are in, or I mean, we have mortgage, we have commercial brokers, but the main, the biggest number of brokers in Quebec are residential broker. We're 15 or so thousand. The residential stuff, people still get divorced, married, more kids, less kids, change jobs. So having a roof over your head won't be affected very much by a slight increase or an increase, or unless it's drastic where it jumps to 22%, or that would certainly have an effect on everybody. But a 1% hike like now with low inventory, I don't see it killing the market, is what I'm trying to say.
No,
It's
but
gonna it's sensational. It's on the news everywhere. But it's, rest assured, whoever's a real estate agent that's residential in the greater Montreal, even in the province of Quebec, you're not going to feel that.
But people also, you have to understand this. They probably also counting, make a budget. Let's say, yes, let's say just to qualify, it costs me like maybe $100, $150 more per month. The gasoline, I mean, it's expensive.
Yeah, but you're not going to cut on housing. You're going to cut on
No,
going
but-
out and drinking till you pass out.
Yes,
You're like,
that's true.
There's choices that are going to have to be
That's
made.
true, but some people sometimes they want to because I mean, even when the market was low, they were still hoping the house to go down, the price was going down. There's always people hoping that everything's going to go down.
But if we look at the market over the last 20 years, the real estate residential market, and you look at the home values, it has
Yes.
not gone down once.
No,
Not
I-
once.
I
Even
agree.
during the crisis of 2008.
Anyway, some people they just have the money. I mean, there's a lot of equity, like sleeping in and some people they have money that they don't ready to invest right now,
Yeah.
and
Especially with
hoping that it's going to go down, and that also slows down the market in the sense that, okay, because I've seen it, and new projects, people they still new projects. Basically, there's no basically you buy I won't say at cost, but it's not like you buy on resale. I mean, there's no competition. You buy from from the builder, and it's still hoping the price is going to go down. But how the price can go down? I mean, the builder won't pay money from his own pocket for you to buy a project.
And when we know that there's a lack of inventory, just because there's more people wanting to buy and moving into the to the province, it's not going to be fixed in 6 months or 1 year,
No.
or it's going to take many years to catch up with the demand. So prices, I don't see prices going down. I want to talk about reverse mortgages, because you kind of said there's a lot of people with equity in their properties and
Yes,
untapped equity. Reverse mortgages are not something that we talk about. Real estate agents out there this is a way to reach out to nurture your clientele, your base.
true.
These mortgages only apply to 55 and up. So if you have,
It's a niche product.
yeah, but it's a great way, I think, to just reach out and say, hey, did you know that this is a product or a service? It's got nothing to do with buying and selling the property, but it's a way to nurture. So
No, exactly. Some people, because for certain people, especially you're 55 and over, you're retired, or maybe you're more sensitive to the payment you have to do per month. Okay, so obviously you cannot be rate sensitive in a sense. Obviously, the rate is a bit like higher than the regular rate. When it's higher, it's not like a private lender, but for these people, I think it's a great product in the sense that you have access to your equity. You don't make any payment per month. There's no monthly payment. Yes, there's an interest that accumulate over the years. But I mean, somebody that would like to give money to the kids, to help the kids to purchase a property, because
and another thing, sorry to interrupt you, but because you made me think, if you take the money out and you give it to your kids or whatever, it's not taxed either, because it's not revenue; it's a loan.
No, it's a loan.
So it's tax free.
Yeah, and let's say if people they want to pull out money for their own benefit, instead to take a lump sum, they can take like a monthly payment. Okay, because sometimes maybe they don't need, let's say, the lump sum. They just need maybe an extra $500,000 per month, or $1,500 per month. So they can do that. They can.
Do you save somewhere here? Or,
Yes, you're saving on the interest rate. You pay less interest because you're paying interest only on the money you pull out
Okay.
on
and
a
it's
monthly
compound
payment.
interest like a normal mortgage, correct?
Yes, but it's a compound interest per month, per year, and the rate obviously is a bit higher than the regular bank. But like I said, you don't have any to do any monthly payment.
And it's lower than a private loan.
Much lower, yeah.
So there you go. So not something that we talk about often, and not something that's known. But could it be also a great way for someone to invest in real estate in the sense of I have
Yeah,
equity
for
in
sure.
my property, I want to take it out. Can you actually do that on a secondary property or an investment property, or it has to be your personal home?
That for you have to be like owner, like you have to occupy the property, but you can do blankets. I didn't mention that in the French because I forgot. Basically, if somebody had 2-3 properties.
Yeah.
Okay, so they're gonna take the value of all the properties, and that increase, let's say, the amount you'll be allowed to pull out as an equity.
So I have a
Let's say-
fourplex that I own plus my own property, my
But
residential.
let's say you have your own house.
Yeah.
You have a duplex somewhere.
So the total value
The
could be used for me to get the
yeah, but the
reverse-
maximum is still 55%.
Yeah, but it increases it quite drastically. So I could use that to if I was to want to invest and buy more properties.
Sure.
So it doesn't have
Yeah.
to just be for your own residential use.
I mean, you do whatever
Okay.
equity you pull out, you do whatever you want with
Okay.
it. You
It's
want to
not a-
travel, you might want to buy a car, you want to buy another property, you want to give
You want to
money
invest in Meller Group?
you want to buy more franchises, yes.
That's a great idea.
So, but the only thing is, like I said, it's a product that's not known, but not only by the population, also from by the brokers. Because some brokers are not comfortable, they don't know exactly, or they don't. It's not part of their niche. It's not part of a market that they want to let's say to work on. But I think it's important for the brokers.
Mortgage
Real estate brokers, even real estate
And real
brokers,
estate,
if they know, let's say the clientele, they have maybe in their CRM like a bunch of clients that maybe they're 55 and over, they have a lot of equity, they have more than one property. But I mean, it would be good for them to reach out and to explain to them that they can have access to that.
So if someone's interested, is it the same steps as a regular mortgage? You need an evaluation done by an appraiser, or is it similar? Is it the steps are similar?
It's more or less the same. I would say it's a bit simpler for the documents because the beauty of this, you don't need to qualify the revenue. Somebody can be have done bankruptcy in the past, a bad credit score.
Oh, yeah, that's not taken into account.
No, it's not taking into consideration. So you still
No,
have
because
access
there's no
to equity.
repayment. So, right?
Yeah, but that's it. And the
Credit
equity is
score.
there. The equity is there. So basically, it all depends on your age and also where the property is located and the type of property also.
Okay. So we have there's two
Two lenders.
two lenders for those types of
Two lenders who
mortgages?
have Equitable and Equity Bank.
Okay.
These are the two banks that are offering this product.
So if anybody wants to learn more about it, they can always reach you
Yeah, sure.
through any of our social media platform. But they can also go on your website.
Website, email, phone number. I mean, everything is available on my website, marcomarandola.com, and all my.
Oh, you can go to any of
information
the
is there.
Meller Group information, phone numbers, text, email, DM, and we'll forward it. So, Marco, thanks again for doing this. We're going to do this every Wednesday at 11 o'clock and 12 o'clock, around that time. And next week, I want to talk about credit fixing.
Yes, fixing credit. Yeah,
which is something that we do that's unique. There's no one else that has that.
that we have
capacity.
because you need technically with correct credit, and also can negotiate the debts for the clients.
But again, this is exclusive. There's no other mortgage agencies that can do this. That
No,
has the accredit-
there's no, to my knowledge, there's no other
That's right.
mortgage
We like
agencies
to
that
be the
have
first.
the license from the OPC.
And do you not think that this might become even more important now with the market getting tighter, the interest rates going up? Wouldn't it be? Yes, it would, Etienne. Absolutely. No, but
you pull out the word from my mouth.
But
I
you don't
mean,
think it's
no, but
gonna
I
be-
mean, it's always important because whatever your credit is, the credit is the base first to have access to the best debt ratio. So even if you have a debt ratio, let's say a credit score at 650, but the credit, the right credit score to have the best debt ratio is 680. So we can always help clients know to improve the credit and to reach that 680.
So what do you call this? Credit fixing? What's the
Credit
terminology?
fixed credit, credit correction, and
so-
also debt. We also do the debt. We can negotiate the debt for the clients. Let's say to lower, let's say, the monthly payment, and to increase also like the credit score.
So we do traditional financing, the standard mortgages. We have a 27 or so
do everything.
lenders. We do residential. We do commercial.
Commercial too, yeah.
We do private loans.
Private.
We do the reverse mortgages, which we talked about a few minutes ago, and now
Yes.
we do credit
Wait, just
correction.
the one thing I want to specify though, because yes, we do we do business with private lenders. We don't lend money. That's very important for the AMF.
We're not. That's good to clarify. Yes, yes.
We don't lend money. We have access to lenders that are accredited with the dominant lending.
Perfect. So thanks again, everybody. If you have any questions, reach out. We'll answer, and we'll see you next week.
Excellent. Perfect. Thank you.